You know how sometimes you just need to cut through all the noise, especially in a world as fast-paced as the financial markets?
Absolutely. One minute things are flying high, the next, not so much. Staying informed feels like a full-time job.
It really can. Well, that's exactly what we're trying to do here. Today, we're taking a deep dive, really getting into the Indian share market's activity from Monday, July 21st, 2025.
And then looking ahead to Tuesday, the 22nd.
Exactly. And all the insights we're sharing, they come straight from a detailed share market review and outlook source. It's packed with info.
Good stuff. So what's the goal for the listener today?
Our mission really is simple. Slice through the numbers, the jargon, all that complexity. We want to pull out the most important nuggets for you.
Helping you grasp the sentiment, what's really driving things?
Precisely. So you walk away feeling genuinely well-informed, not overwhelmed. Okay, let's unpack this.
Let's do it.
So Monday, July 21st. It started a bit, subdued, didn't it?
Yeah, flat opening for both the BSE Sensex and the NSE Nifty. Not a lot of fireworks early on.
But then things picked up a bit by mid-session. They started to gather some momentum.
Right. We saw the Sensex trading around, 81,929, up about 172 points, maybe 0.21%.
Yeah, and the Nifty was hovering just over that big 25,000 mark, up about 41 points, so 0.17% in the afternoon.
So modest gains overall, but gains nonetheless.
True, but don't let those overall numbers fool you, because when you look at the sectors, it was definitely a mixed bag.
Ah, okay. So who was leading?
Metal and financial stocks, they really charged ahead, showed some robust gains.
Laggards.
That would be IT, FMCG, and certain PSU banks, public sector undertaking banks. They were definitely lagging.
So a divergence there. What about the overall feeling, the sentiment?
Cautious. I'd say cautious, but maybe with a slight positive undertone. After 3 tough weeks, caution makes sense.
Of course. Investors probably keeping a close eye on those Q1 corporate earnings.
Exactly. Q1 earnings, that's the first fiscal quarter, and the broader macroeconomic signals, too, all under the microscope.
What's fascinating here is that divergence you mentioned, the overall market inching up, but these sectors pulling in different directions.
Yeah, what does that tell you?
Well, it's not just investors being picky. It signals something potentially deeper, maybe a shift. We often see this when investors start, reallocating capital.
Moving money around.
Right. Moving away from sectors facing maybe long-term issues like changing consumer habits or regulations and moving into areas with clearer catalysts or maybe just safer bets.
Defensive plays.
Could be. It's like a subtle hint of a broader economic recalibration going beyond just those immediate Q1 headlines.
That's a really crucial distinction, isn't it? It suggests investors are making very deliberate choices based on outlook, not just recent numbers.
Exactly.
And speaking of individual choices, this is where it gets really interesting. The individual companies, that's where the drama often is, the real lessons.
The stories behind the ticker symbols.
Yeah. Let's dig into some of those, because there were some pretty surprising moves.
Okay, who are the stars?
Well, on the gain side, ICICI Bank definitely stood out, up 2%.
Solid bank. What was behind that?
Their Q1 FY26 results, pretty robust, showed a healthy 15.5% year-over-year rise in net profit. Strong treasury gains helped, and good credit growth, too.
Fundamentals looking strong then. Anyone else?
JSW Steel had a good day. Brokerages actually bumped up their target prices after its Q1 results came out.
But I feel a but coming.
Yeah. But the note was their valuation still looks a bit stretched. So good results, but maybe priced in already.
Common theme these days. Okay, continue.
Then in infrastructure, Ircon International climbed over 4%. That was thanks to bagging multiple new contracts.
Infrastructure spending kicking in.
Seems like it. And another one, Patel Engineering, rose over 2%. They locked in a big contract from NHPC worth about 240 crore.
Wow, significant wins.
Definitely. And check this out. Samhi Hotels, it's a smaller cap hotel stock, hit new highs. It's surged an incredible 109% since April.
109%. Wow. What's fueling that?
Apparently, just really strong earnings across the whole hotel sector are lifting stocks like Samhi.
Makes sense. Travel's back. Any others? Mid-caps?
Yeah, looking at the Nifty mid-cap movers, Jindal Stainless was up 3.88% and NLLCO gained 4.1%. So, some strength there, too.
Okay, quite a few bright spots. But it wasn't all rosy, right? Who faced challenges?
No, definitely not. Union Bank of India, for one. Shares dropped more than 3% after their Q1 results.
Wait, didn't she say PSU banks were lagging? Was this related? What is the issue? Were profits down?
Actually, profit growth was positive. But the market was worried about their interest margins narrowing. That seemed to spook investors.
Ah, margin pressure. Okay, that makes sense.
Well, the big one really was Reliance Industries. Its stock slipped nearly 3% after its Q1 results.
Reliant. But wasn't their profit jump huge? I thought I saw a headline.
It was huge, an impressive 78% year-over-year net profit jump. But, and it's big, but that was largely driven by one-off gains from a stake sale.
Ah, okay. Not core operations.
Exactly. And what's probably more concerning for the market is that the stock's price correction continued. It even breached some key technical support levels.
If we connect these individual stories back to the bigger picture, you see different forces at play.
How so?
Well, for Ercon and Patel Engineering, those contract wins. Direct, tangible catalyst, future revenue locked in. Investors love that certainty.
Right. Clear cause and effect.
And ICICI Bank, it's about fundamental strength, solid business performance. Pretty straightforward.
Okay. But Reliance?
But Reliance is, well, more nuanced and frankly more interesting. A 78% profit jump sounds amazing, doesn't it?
On paper, absolutely.
But when a huge chunk comes from a one-off event, not the core business growing, investors tend to look past the headline number. It highlights this trend. Some call it the valuation trap.
Valuation trap. Explain that.
For these really highly valued companies, even news that looks good can trigger a sell-off if it doesn't meet super high expectations for core operational growth. The market punishes success if it's not the right kind of success for its current price tag.
So it's about the quality of the earnings, not just the size. Got it.
Precisely. Key lesson there.
That's a really insightful way to frame it. So stepping back from the individual stocks again, what does this all mean for the broader market sentiment right now? You said cautious earlier.
Yeah, and it seems that stuck. The general market sentiment remained pretty subdued. It felt like a hangover from those 3 straight weeks of losses.
And many heavyweights didn't exactly wow anyone with their Q1 earnings, right?
Exactly. That didn't help lift the mood. Broadly, cautious undertone was definitely the feeling.
Plus, there was that nervousness hanging over from the global scene at the start of the week.
Right. Ongoing uncertainty. Things like those US-EU trade deal talks or President Trump's proposed higher tariffs. Never far from mind.
Those global factors were clearly rippling through, weren't they? Influencing the mood here.
Always do. And then you layer on the technical indicators.
Yes, the charts. What were they saying?
Well, they were painting a picture of, frankly, ongoing bearishness. The Nifty, for instance, was trading below its 20-day EMA.
The 20-day exponential moving average, key short-term trend indicator. Below it isn't good.
Not usually a bullish sign, no. Plus, its RSI, the Relative Strength Index, that was at a 4-month low.
Oof. Suggests a real lack of buying momentum, maybe even oversold.
Could be oversold, but definitely shows weakness. And the Bank Nifty was also under pressure. Both indices just showing weakened medium-term momentum.
So you have subdued sentiment, global worries, and weak technicals.
This confluence of factors, yeah, it raises that critical question. How do these external forces and technical signals really shape how investors behave, beyond just the company earnings?
It feels like a delicate balance.
It is. The hangover from losses, the global jitters like trade tensions, it creates this backdrop of, well, uncertainty. So even if some companies do well, like ICICI, this broader anxiety can really cap the overall market gains.
Makes sense. Limits the upside.
And those technicals, like the Nifty below its 20-day EMA or the low RSI, they aren't just lines on a chart. Think of them like the market's pulse.
A visual representation of the pressure.
Exactly. Sustained selling pressure, lack of buying interest. When those signals line up with global uncertainty and a so-so earnings season, it tells us investors are probably going to stay risk-averse.
Which leads to that sideways to bearish outlook you hear about.
Precisely. It's almost like the market's holding its breath right now, isn't it?
That's a great way to put it. Just waiting for the next clear signal. So with all that in mind, what about tomorrow, Tuesday, July 22nd? What are analysts watching for?
What does the crystal ball say?
Well, generally, analysts seem to be expecting more of the same, really. A range-bound or maybe mildly bearish trend for Tuesday.
And the reasoning.
Primarily because the market couldn't get back above those critical moving averages we talked about. And there isn't a really strong positive trigger on the immediate horizon.
So, more wait and see.
Pretty much. They do expect some volatility, though, as investors react to more Q1 earnings coming out and, those ever-present global cues.
Any key events or earnings to watch specifically on Tuesday?
Yeah, internationally, we've got fresh results from Baker Hughes, Texas Instruments, Coca-Cola, and General Motors.
A mix there. Tech, energy services, consumer goods, auto.
Right. And the market direction will likely be heavily influenced by these, especially tech and banking sector earnings overall, which always seem to move the needle.
They carry a lot of weight. What about specific levels for the Indian indices, Nifty and Bank Nifty?
Okay, for the Nifty, technical experts are saying it remains under pressure. The trend looks sideways to bearish as long as it stays below key resistance. That's around 25,200, 25,300.
And support. Where might I find a floor?
Support is seen near 24,900, 24,850, so that's the range to watch.
Okay. And Bank Nifty?
Yeah.
Similar story.
Yeah. Bias remains sideways to bearish there, too. Support seen around 56,000, 55,500. Resistance up at 56,500, 57,000.
So, pretty tight range as expected.
Seems that way. Oh, and if you're looking for specific stock ideas for the week, some analysts were suggesting Damia Bharat and Godrej Properties for accumulation.
Longer term holds, perhaps.
Right. And ONGC and HDFC AMC for more short-term trading opportunities.
Interesting picks.
Yeah.
You know, this outlook for Tuesday really highlights that interplay we've been talking about. Earnings, global stuff, technical levels, they're all feeding into each other.
It's never just one thing, is it?
Never. Those support and resistance numbers you mentioned for Nifty and Bank Nifty, they aren't random. They're critical thresholds. If the indices can't break above resistance, it just confirms that weakness, that lack of buying conviction.
And if they break below support.
Signals more potential downside. And the focus on tech and banking earnings for Tuesday, no surprise there. Those sectors are heavyweight.
Their performance can set the tone.
Absolutely. Combine that with those lingering global trade concerns, and you get an environment where investors are likely to react pretty sharply to any news, good or bad, hence the volatility expectation.
A highly reactive market, then.
That sums it up well.
Okay, so let's try and wrap this up. To recap our deep dive into the Indian share market on July 21st, we saw a day of mixed signals. Key indices like Sensex and Nifty made slight gains.
But beneath the surface, it was metals and financials leading, while IT and others lagged behind.
Right. Individual stocks showed some big winners, driven by good earnings or contract wins like ICICI or IRCOM.
But also some notable losers, like Union Bank on margin concerns or Reliance, where that big profit jump wasn't enough due to its one-off nature.
And the overall sentiment remained cautious, sort of a hangover from recent losses, compounded by global uncertainty.
And those technical indicators pointing towards potential near-term weakness or maybe just consolidation moving sideways.
Exactly. So that brings us to our final thought.
Yeah, considering how deeply things like global trade tensions or even the earnings of international companies like the ones reporting Tuesday impact our local market here in India.
It really makes you think, doesn't it?
It does. What does this tell us about how truly interconnected our financial world is? And maybe more importantly for you, the listener, how might understanding these wider ripples, these global currents, give you a significant edge when you're navigating the markets in the future?
Something to definitely mull over.